Hey, it's Todd Ault, and welcome back to Wall Street Words. Today's word is mandatory convertible securities. Now, what does that mean? If you own a convertible security in a public or private company, usually the owner of the security gets to choose whether they convert or not. And so let's say you own debt and you choose to convert it into equity or into some other instrument, it's your choice. Under the mandatory convertible security, the company can force you or you're mandatorily required to convert. Now, this usually happens if the company reaches a certain amount of milestones or the price goes to a certain level for a certain period of time and trades a certain amount of volume, market at risk, and therefore they can force you to convert or you're mandatorily having to convert. These are concluded in the documents when you first sign the agreement, the Securities Purchase Agreement, or you issue that debt. Today's word is mandatory convertible securities.
Hey, thanks for watching Wall Street Words. Please subscribe and hit that bell below. If you think this video adds value, please share it with somebody. By the way, if you want to watch more Wall Street Words videos, there's 2 videos right here you can watch right now. There's new videos every day. Thanks for watching Wall Street Words. Always great things happening here.